Hey traders, today is Tuesday, November 18th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame analysis look at the euro dollar. Here's what we're looking at. On the weekly charts, we did reverse off of multi-year uptrend resistance back in September. That drop gave us a 3.7% drop into a support zone right into the start of the month. That was the 786 retracement of the advance off the low from July. And it's also this radical pivot from March 2020 and the objective 2022 swing high, okay? We rebounded that off that with a 2-week rally. Looks like it's fizzling out. Started to fizzle out on Friday, right at a basic 38.2 retracement of the decline off September. So the focus is on a breakout of this zone on the weekly charts. Zooming into the daily chart, we're still holding that descending channel off of the early October decline, which converged right on that 38.2, same exact level. And here's the third consecutive day that we're selling off from this zone. The focal range break for euro dollar is the monthly open, that's 1542 into 1537. Resistance now at 1645 into 1640. We're looking for a breakout of this zone for guidance. If we zoom it into the 4-hour chart, here's the same pitchfork we've been tracking for a few weeks now. Looks like we just slipped below the 75% parallel. From here, the focus is, do we get resumption into a deeper correction towards a more meaningful support zone, or does this reverse back and give us a topside break? Levels to keep in mind. Initial resistance, the weekly open comes in right at 1621. Bearish invalidation comes in at 1640, again into 1645. That 38.2 converges right on downslope resistance over the next few days. The next major support zone of focus for the euro doesn't come until 1540, 1537. That's the objective November open, the 618 retracement of the month to date range, and those swing lows again from October. A break below that would be needed to suggest a more significant high is in place, a larger reversal is underway. So if we are heading lower in the euro dollar on this stretch, the weekly open should hold resistance. Again, that's 1621. Over the next few days, we are getting some event risk. FOMC minutes are on tap tomorrow. I'm not really expecting much off that, but the big heavy hitter is going to be on Thursday when we're going to get the updated non-farm payroll figures. We're looking for a print of about 50,000. Unemployment is supposed to hold 4.3%. Average hourly earnings supposed to hold 3.7%. So we'll look to see what impact that has on Fed fund futures. We've already seen this drop below 50% for the first time in a few months. That is to say that the markets are pricing in only a 46% chance now that we're going to get an interest rate cut next month. And so that shift obviously has been giving a little bit of alleviation for the US dollar. We'll continue to see how that print on Thursday changes anything as we continue to track this euro dollar. I'll try to keep you updated on X as always at MB4X. Till then, best of luck trading. See you tomorrow.